Well, the time is just gone 19 minutes past 9, and this hour of news and views is brought to you by Africa Muslims Agency. We're going across, taking a look at the Reserve Bank and also looking at inflation, where we've seen it accelerating to 5% in the month of June, the highest since June 2024. And many questions are being asked. Where are we as an economy? But also, what does this mean for you and I? What does this mean for the poor? Because we know at this point in time that there is a huge problem. There is a cost of living crisis of mammoth proportions. We're joined now by economist Reezwana Sumad. Reezwana, assalamu alaikum wa rahmatullahi wa barakatuh. Welcome and jazakallah khairan so much for your time.
Walaikum salam, Jazakallah for having me. I was struggling hearing your introduction, so if there was a question for me, please can you repeat that?
Yes, no, it wasn't. I just basically introduced the discussion for this morning, Rizwana, and I spoke briefly about the Reserve Bank keeping our rate steady, but also in terms of inflation at 5% in June, the highest recorded since June 2024. Where are we as an economy against all these
Yeah.
numbers or these statistics that we see now being published?
Yeah, what we are seeing is that because of the sharply higher oil price as a result of the Middle Eastern conflict, countries all over the world are facing higher fuel costs. South Africa is not alone in this, and so the 5% inflation rate for June did not come as much of a surprise. It is the highest in several years. What we are also starting to see is fuel prices increased, but we're starting to see other components of goods and services increase. Financial services prices rising, rental prices increasing as well. And so the rising inflation trajectory is starting to become more broad based and not just limited to transport. So that is a significant negative development for South Africa because fuel as a standalone component makes up a large portion of household budgets, and so consumers are likely to come under a lot of pressure in the middle and in the second half of the year as a result of the fuel price shock.
Well, Rizwana, obviously, transport has been the largest and the major contributor. But once again, it is creating a crisis. It's creating a cost of living crisis because consumers, because people, to compensate for the higher transport costs, have got to make sacrifices. They've got to cut somewhere,
Mhm.
and it is creating problems elsewhere.
Yeah. The one thing about transport is that we can't not spend on transport. And what impact this is having is that consumers are having to make these difficult choices, spending more on transport and not spending elsewhere. So discretionary incomes are under pressure, discretionary spending is under pressure. We're likely to see a decline in spending on things like services, recreational services, and even things like food, the food basket, and overall goods basket spend is likely to come under a lot of pressure because it's not like consumers can not spend on transport costs. What the government did do early on in this crisis is provide the fuel levy relief, temporary fuel levy relief, which costed the government about 17.5 billion rands for about a 3-month period, and that's effectively gone away or fell away. It is going to be a difficult a few months with elevated transport costs. What we are also seeing is that in August, we could see an increase in the diesel price, and the petrol price might also rise in August because the oil price has now risen to $99 a barrel, and the rand in the last day has weakened quite sharply. So that makes the cost of fuel much higher, and obviously it resets on a monthly basis. So another fuel price increase is likely upcoming in August, and that is going to place even more pressure on consumers. Now, that's the bad news. Is there any good news? The good news is that food price inflation is still very low, and I think households have felt it with declines in fruit and vegetable, fresh produce prices are much lower now compared to last year. So it's actually in deflation. Prices have come down in some of the food price components, and meat price inflation has also come down. So price is still higher, but not increasing as it was at the same time last year. So we're seeing some food price disinflation, is what we call it, which is positive because we're not yet being saddled with sharply high fuel and sharply higher food, which, it's just limited to fuel and a few other components, and food prices are still fairly contained for now.
Yes, Rizwana, and also I think together with fuel prices, also we're talking about energy costs as well. We know July is a month normally where we find that increase in energy, in
Mhm.
electricity in particular as well. So that is something that one needs to take into account in terms of how consumers and ordinary households and the economy in general has actually been hit. But let's just talk a bit about the Reserve Bank and the decision to keep rates steady in a climate like this.
Yes, the Reserve Bank is quite concerned about growth and the conditions in the economy. Even though the oil price is much higher and fuel and inflation has accelerated, yesterday the Reserve Bank decided to keep rates on a hold at 7%. Now, the market and we had forecast the Reserve Bank to increase the interest rate by 25 basis point to 7.25%, and of course that did not happen. The reasons for the Reserve Bank holding, partly because of the consumer outlook and partly because of the weak growth outlook, but also because it probably anticipates oil prices coming down quickly in the next 12 months, and that to help local inflation. And hence, even though fuel and oil prices remain quite high currently and is placing a lot of pressure on the economy, the outlook for the next 12 months is seeing the oil price fall towards $75 a barrel, so a sharp decline in oil. And we all know that when the oil price starts to fall, we are likely to see reductions in our local fuel price. So the current state of the SA consumer and the current state of this very weak economic environment, we believe is going to be temporary or short-lived. And next year, we are likely to see a better macroeconomic environment for the consumer from a fuel and inflation perspective, and also interest rates possibly coming down towards the end of 2027 because inflation should come down as well.
Yes, but also Rizwana, with some of these global developments that take place, like for example now with what is playing out again with Iran and what it's doing to the oil prices as well, is this impact is being felt right across the entire world, and even in the country like the United States, in Europe, all the established economies. So South Africa is not different or unique in terms of feeling the impact. This is felt, but I think the critical issue is where you have the more, I would say, established economies, they are able to an extent, absorb the impact or
Mhm.
cushion the blow. In an economy like ours as well, I mean, I'm not too sure how much longer can we cushion the blow before we find that we are in a really serious economic situation.
That's precisely the point. If you look at the US, if you look at the Eurozone, other developed market countries, and even other large emerging market countries have early on encouraged things like work from home, have early on started procuring fuel from other countries and other suppliers, not just in the Middle East, started becoming more proactive at the start of this conflict, and were able to shift their supply chains to be able to soften the blow to their economies. From a fiscal policy perspective, they've got also much larger budgets to be able to support the consumer in times where they needed. The COVID pandemic is a case in point, and the U.S. economy is a very good example of how it had done that, and some would say excessively so. With the South African economy being small, being very susceptible to these large movements in commodity prices prices, particularly oil, and having very little room to maneuver or support the consumer and even support private sector businesses to diversify their supply chains, it does become a very difficult environment locally. And we're almost a price taker when it comes to some of these big global shocks that impact the economy. And even the COVID pandemic was a good example of how we were almost last in line for some of the vaccines that were shipped. So unfortunately, the nature of the SA economy being very small, our budget also being very small in relation to some of the other larger emerging market economies, and also the lack of agility by government. So these things take a lot of processes, a lot of bureaucracy within government and public sector and not agile enough to respond to crises. These all does impede on economic growth, and we are likely to sort of move into a situation where if oil remains elevated for much longer, growth is likely to remain to come out much weaker. The Reserve Bank forecast growth of this year of 1.4%. But if you think about the SA economy, in the last 5 years, our growth rate has averaged 1% or lower because of some of these large exogenous shocks, negative shocks coming through from the external environment. So we are very likely to be in a place where if the global shocks persist, South Africa's growth will be lower, at least for this year. And then if the shocks end and in the next couple of years we see some type of stability, then growth is expected to recover.
Well, Rizwana, we're going to have to leave it at that. As always, we do appreciate your time with us on Salam Media. All the best to you, inshallah. Have yourself a great Jummah as well. Assalamu alaikum.
Yes. Wa alaikum salam. Jazakallah for having me.
Senior research analyst at Nedbank CIB. We're joined by economist also Reezwana Sumad. And with that, we're going to go for a break. We come back. Our focus is going to be on education meets culture. We're talking about Arabic Language Day in Pretoria.